Hello and welcome to today's CMS Forex daily video recap. Today is Tuesday, August 10th, 2010. We will go over the FOMC interest rate statement as well as the effects it had in the currency markets. To review the fundamental data and movements prior to the FOMC report, watch today's earlier morning video brief. The dollar slumped against its competitors following the release of the FOMC statement. The Federal Reserve acknowledged a slowdown in the pace of the U.S. recovery and moved to prevent the Fed's huge balance sheet from shrinking in an attempt to kickstart the economy. The Fed said that the pace of the recovery is likely to be more modest in the near term than had been previously anticipated, that it would keep rates exceptionally low for an extended period of time, and that measures of inflation have trended lower in recent quarters, meaning that inflation likely will be subdued for some time. Also, household spending was increasing gradually, but constrained by high unemployment, housing, and tight credit, and the vote on policy was a 9-1 decision, with Honig dissenting. Fed officials said that they would reinvest the proceeds from expiring mortgage-backed securities into longer-term U.S. Treasuries, which was the big news from the statement. The move should help a weakening economy by keeping mortgage rates low. However, how much of an impact it will have ultimately remains to be seen. Mortgage rates are already at very low levels, while the housing sector remains in poor shape. Regardless, it was some attempt by the Fed to keep monetary policy looser than currently planned. So, following this announcement, which some might call quantitative easing light, the euro-dollar pair and others rallied against the greenback as it weakened across the board. The fact that the Fed had come through on the dovish side gave the euro a chance to pair all of its New York and overnight losses, as it tested the area just below today's high at 1.3233 was where we entered the global session. Now, we do remain within the trading range from today's session, so we didn't see a breakout following the Fed announcement, but we might see continued dollar weakness throughout the rest of the week. Overall, any concerns that the Fed might not go through with steps to reinvest proceeds from those maturing securities had been a bit unfounded, and we had seen that the dollar bears had paired some of their positions buying the dollar in the last two sessions, and following the statement we saw the dollar sold off again. The concern now will be if other countries around the world will join the U.S. in showing weakness in their economies, which could bring about more general risk aversion, which would actually help the U.S. dollar mitigate its weakness, as well as help the value of other safe haven currencies like the yen and Swiss franc. For instance, we did have China's economy come out with a weaker report in that its imports growth was slower than expected, and that did cause some risk aversion jitters in the markets and overnight trading. For now, though, the dollar remains under pressure, and we'll see how things shape up the rest of the week. Taking a quick look at some of our other major pairs, here we're looking at the pound dollar. We had seen a very sharp decline during the overnight and early New York trading session, but after testing 1.5709 following the FOMC decision, we saw the pair rally strongly, cutting all of its earlier losses, though it did pair some of its highest gains following the decision. This puts us back into the levels we had seen in the middle of last week, around the 1.5870 area. The dollar-yen pair, after rallying overnight, fell within 15 pips of the 85 level, a level we tested in Friday's session, and has been setting up as an important level of support so far. We'll see once the Asian session begins if dollar weakness carries over and we are finally able to break below this level. If not, we may see further sideways trading with resistance at the 86.20 level. The Aussie dollar, which in our morning brief we saw tested support around 0.9050, bounced up off of that level, similar to the euro and pound, pairing all of its earlier losses and then giving up some of those highest gains it had following the FOMC decision, and it was trading around 0.9130 above its 200-period moving average. The US dollar Canadian dollar, meanwhile, which had moved above its resistance from yesterday at 1.03, and after hitting resistance at 1.0385, we saw the pair move back down and retest this level of resistance as support, with that actually holding. So we have a new important level here at 1.03 that we should watch in the sessions to come. So that's a quick look at the market behavior following the FOMC. The dollar remains pressured after the Fed introduces some semi-quantitative easing measures in order to help prop up the economy. We'll see if this means further greenback weakness in this week and the weeks ahead, or if perhaps the greenback losses have already been a bit overextended and we see a bit of consolidation now. Now let's take a look at the fundamental releases in the upcoming global session. Tonight at 7 p.m., the UK posts a measure of consumer confidence, which is followed by Japanese measures of their core machinery orders, as well as the corporate goods price index, a measure of Japanese prices. That's followed by the Australian consumer sentiment, and we get a slew of Chinese reports, including consumer prices, industrial production, retail sales, as well as a measure of new loans. Overnight, we get another UK report, the claimant count and unemployment rate, the monthly jobs report for the country, as well as the Bank of England inflation report, which tends to have a lot of event risk around it. Tomorrow, the fundamental docket in North America is rather light, with US and Canadian trade balance being the two releases. And that wraps up the daily video recap. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching and wish you good trading.